Welcome, my friends. I am Big Cheds. It is Monday, April 5th, 2021, and this is Making Bread with Cheds. Hello, everybody. My name is Big Cheds. You can find me on Twitter at Big Cheds. You can think of me as a candlestick guy, someone who just follows the price action. I've been around for a while, and I'm a community trader, so I like to teach. I like to learn. I'm, kind of known as a newbie helper. And this is a new venture here with Benzinga. This is our third show. I like to kind of share some of my thoughts on the market. I bring on a guest. We have some amazing guests. Today's guest is a really special one. And then we'll do chart requests. So that's really what Making Bread with Cheds is. I want to teach you to feel more comfortable. I want to empower you. I want to talk to you about what I think is important in terms of how you should be approaching technical analysis based on my background, Japanese candlesticks, classical charting. I am CMT level 1. I was pseudo amateur poker player, and I've studied psychology. So I kind of balance all those things. If we can go ahead and share the screen, we'll kind of kick the party right off. And once again, thank you for coming. Thank you to Benzinga. Hit that like button. Of course, you can find me on Twitter. I'm at Big Cheds. I am a founding analyst at Bitcoin Live, the best-in-class educational platform for crypto. We have an amazing guest today, Chartman Dan. I remember coming on to his stuff a few years ago, just on Twitter. I was searching some tag for a play I was in. And I was like, wow, look at these nice videos. And I was like, wow, there's a lot of good content. One of the best. He's on YouTube, Chart Guys. He's got his own website as well. So we've got a kind of a brief assortment of stuff to look at tonight. I'm going to go over the major coins, and there's some alts, to talk about, and we'll see how it flows. Reach out to me in the comments. Let me know how you're doing. So we're looking at Bitcoin here on the daily chart. We have about 57 minutes to the candle close. So this is an opportunity for a lesson. When you're looking at your oscillators, here we have the on-balance volume and the RSI. The on-balance volume is an index indicator. It's a tally of the buy and sell volume. The RSI is a bounded oscillator. These calculate on the candle close. So like when you're drawing divergence, preferably a regular divergence with the on-balance and maybe a hidden divergence with the RSI, you're going to use the candle body close, right? You're going to use the candle body because these are calculating on the candle close. So the point I'm making, you may wonder what's your point. Point is, this is a good time to look at the charts because you're getting kind of the full value of the candle. It's Monday. Here's another way to illustrate that. I could go to a weekly chart. I'm getting some extra data. I'd say, oh, look, there's low volume. Wait a minute, there's 6 days left. So yes, we'll talk about the weekly chart, but it's a good point I want to make that you want to look at the amount of time left in the candle, especially as you're kind of sorting through time frames. Certainly dependent on your bias. Maybe you go here 6 hours. Okay, we're getting close to the end of a 6 hour. That'd be a good time. So keep an eye on that. We have a tightening range here on Bitcoin, and people often ask me, what is it going to do next? What do you think is going to happen? Here's what you want to keep in mind. Trends tend to continue. There's a momentum because you have an imbalance in the supply and the demand. All right. If there's more supply than there's demand, you have the kind of incessant force pushing the price up. Also in vice versa in reverse, right? If I was to, invert Bitcoin. So trends tend to continue. Keep that in mind. And as they're continuing, they're consolidating. So you're really kind of looking at the texture of the consolidation. Kind of in this setup right here, I have the candles, the regular open, high, the open, the close, the high and the low. I've got some moving averages. I have the longer term, the 200 MA. You're trying to wonder, what am I looking at? Is it bullish? This is an important moving average, the 200, because generally speaking, if it is moving up, it's trending, and it's uptrending, then whatever you're looking at is trending up. Secondly, if the price is above it as well. So if you have those two conditions, it's hard to argue in anything but an uptrend, especially in the kind of broader sense. All right. As you kind of zoom in, you get those shorter term moving averages, or medium term, in this case, the 50, the orange line. People like to try to do golden cross and death cross. I'm a little skeptical in those. For me, it really depends on the price proximity to the moving average cross. Anytime you're trying to use a moving average cross, you want to keep this in mind. First of all, you need a trending market to reverse from or to cross. So if it's the price action sideways, those moving average crosses have a muted signal. Secondly, you want to have the price proximity to where the moving average is crossing. That way the move isn't baked in. So here we have Bitcoin. We have a series of highs. We have the initial high back in February. We kind of broke that high and a couple things. So you want to understand that once you break a resistance level, ideally you can turn it into support. And you definitely, bears don't have many theses or kind of defensible positions. But one, really, you could say we're failed to hold this level after breaking it. We clearly established the level that needed to. This was the supply. This is the resistance, and you see it's rejected there, breaks out, comes through, and you see how the price actually consolidated in this area. We get the doji, the spinning top, all this kind of indecision action in the middle of March. We're right there as well. So we're kind of right at that level. So we almost need to not look at this price action above 60K. I think we really, I think we look at it this way. We want to focus on our key horizontal levels. We've got one there. So if we say, okay, I'll buy that big Cheds, that's a key horizontal level. I've kind now we're walking into a bullish thesis. We have kind of an ascending triangle view where we have the kind of the rising demand, where you set your low. After that upper Bollinger move, you set your low. That low, you always think about what's the context. That low is in relation to that high. So then you say, okay, now that kind of cements, further strengthens my bull thesis. That's your prior stair step level. Okay, now that's your low. Now there's our next low. And now you have the MA50 double tag, MA50 area. So you're kind of seeing things lining up. That gives you the ability to kind of, I think, present a bullish thesis on this ascending triangle. So if that's the case, then what was in one point a bull trap or a Japanese candlestick, a upthrust, actually becomes what is called an out-of-line move in classical charting, where you have an early breakout in the direction of the eventual trend, right? As opposed to, say, a false move, if the price would dip here, right? So you think about that. The false move versus out of line. It's almost like you're in lunch, you're in line at the cafeteria, right? And somebody jumped out of line. So when it was initially, bear bull trap, right? It was actually just the out of line move. So that would be, I'd be interested to see if it plays out that way. And in my view, I don't know why you wouldn't assume it goes that way. Why? Because trends tend to continue, and you have an imbalance in the supply and demand equilibrium. There's more Bitcoin being taken kind of off trading exchange every day and being put in cold wallets, and more than is being mined. So that gives an advantage to bulls. Plus, you're just kind of on the larger time frame weekly. I'm telling you, step out your time frame. If you're feeling lost, step out. If you're in the hour, go to the daily. For the daily, go to the weekly. And we're seeing this beautiful consolidation. We've talked about it, where we have kind of the EMA 8, primary uptrend support, price acceleration, price movement outside of a standard deviation, pull back to the EMA 8, kind of rally, bounce again. You kind of do that. So you have that kind of channel, beautiful, clean channel. While that's happening, you have kind of a pretty clean setup in the indicators. You have the RSI still in the power zone, on balance volume, confirming the trend, right? So it's, that's why you think it's probably going to continue and break out. Let's see. We got a little bit of time. We have the alt. Let's roll into lesson of the day, and we'll go from there. So lesson of the day: don't chase that shiny object. You're in some trades; they're not going your way. And you're focused on them and you're watching them. All of a sudden you see someone tweeting, all these people, it's running. All of us, don't go open up a position, right? You need to, whatever you're going to play, you need to watch it first. You need to understand the price action. You're going to play what you know the best. And everything is my experience. That's why I do this. I've made all these mistakes. Is when I jump around and I play something that I haven't watched. I don't understand the L2, the bid and the ask spread. I don't understand any of that. You get in trouble. Don't chase the shiny object. Like, every trade should have been forethought, because it should be based on levels that you marked out days ago, based on key support and resistance, ideally key horizontal levels, ideally multi-tested, right? All that good stuff. So that's the lesson of the day. Don't chase the shiny object. Ethereum price discovery, bullish, no big deal, right? And I'm not surprised, and not that I played it like 100x and I'm a millionaire now, but I'm not surprised that it continued. And why I say that is all the time it was dipping kind of in this area. And you can see if we kind of go down to the daily, really how it did respect that, principle of polarity, the kind of support resistance flipping, where you have kind of a pretty well-established horizontal area, really even arguably that ascending triangle type bullish consolidation. We break out, we get that kind of overextension, pull back, and really kind of respecting it, boom. And now right here on that higher low, you get the little more anxious buyers. I know my man Chartman Dan, we talk about that bullish equilibrium break, and we get that break. We get what I would like to talk about is kind of that second level filter, where we not only get that diagonal break, but we get the horizontal break. What do I mean by that, right? I always want to make sure people know what I mean. So here's our downtrend. Here's our initial resistance. We have the high with what I would view as a high wave spinning top on February 20th. We see the next high, the lower high. So we get that diagonal break, right? But I like to wait because you get a little fake outs, a lot of fake outs rather. I like to wait for then the break of that horizontal, because this horizontal, that horizontal, what do I mean by that? I mean, the high of these sessions, as well as this cluster here, that's a pretty good line in the sand that gives you a defensible thesis, a defensible trade idea, where you can say, like, this is the point I was making earlier, where you could say ahead of time, you just mark this chart. If we break up above that, I'm going long. So that's how you could have played Ethereum. Yeah, you would have been chopped around right now, but you'd still be up a bit. Everything was beautiful. Really, you had the ability to buy. Let's remove it. Really, you had the ability to buy at the MA50. You had these lower Bollinger dips. You kind of look back in the history since really above 100. You really didn't get much. You really did not get many opportunities to kind of accumulate below the lower Bollinger. So kind of make of that what you will. It's bullish. That's impressive. What we need to kind of watch right now, though, I really think about 2K psychological level. I think you're definitely buying the dips in Ethereum until proven otherwise. You see kind of these pockets that you want to maybe be targeting. 1800 really would be kind of one of the better levels. And we do have our guest coming on shortly. So keep an eye on that. Litecoin, very beautifully drawn trend lines there. I really was just illustrating the tightening range on Litecoin. So we have Litecoin lagging behind Ethereum and certainly Bitcoin Cash. And Bitcoin Cash, I had been wanting to either buy at the MA200, which for some reason is not showing up. It's going to be right around, I could probably pull it up. It's important. So BCH, let's do that. Let's go here. So I've been wanting to buy around the blue line, the MA200, because this had kind of, in my opinion, been a level of significance, the resistance, the support, the consolidation, right? So that was something I was looking for. I'm a value buyer. There's really two ways I think you can either buy at that key horizontal, which was lining up to be and didn't happen. Would have been what's called a bullish confluence, where you get kind of more than one factors. We would have had this horizontal action, rise in MA200. That would have been the entry I wanted. Didn't happen. Then you got the break here. So you got the horizontal break. If you're not in it, wait for what's called a throwback, pullback, and a retest of that key level. And that's really the way to play that. Let's get right into it in just a minute here. So Chartman Dan, like I said, you find him on Twitter. He does crypto. He does equities. The guy just works. He works too much. Like, I feel lazy. Plus, he's a great, grows stuff. He's just a great guy all around. Check him out on YouTube. Really solid. Check him out. All that good stuff. Let's go to Trader Talk. Oh man, I know my praise was a little effusive there, but I me and my buddy Big Jonas, we probably watch you. I probably watch 5 of your videos a week. So I mean,
wow. You nailed it. I work too much. I work too much for sure,
dude. I had a bunch of questions I wrote down. I remember. Let's start out. I'd like you to say hello. Tell the audience who you are, and about just take the floor, please.
Sure. I'm Chartman Dan of the Chart Guys. I've been trading about 11 years at this point. I was trading stocks, fortunately, long before I discovered crypto. I heard about Bitcoin, you know, back when I was trading stocks and finding my way, but really it was setting the table. I feel like in 2017, my stars aligned where it was just, I'm ready for this moment to capitalize on this opportunity because I have learned and made all my stakes with smaller capital trading stocks years prior and was able to really dive headfirst into the cryptocurrency space. It was as simple as, you know, reading a few articles, looking at the charts and saying, well, I know what blue sky breakout means. All right, let's get in. And it's been a love affair ever since. And it's definitely not my only, you know, my only trick because I'm just bouncing around where the opportunity is. And back in 2018, I was focusing on stocks, and now I'm focusing back more on crypto. And when you have that ability to jump around, it really opens the doors to a lot of opportunity because in this day and age, there is endless amounts of things to be trading. And with the rate of technology, that's not going anywhere. We're only going to have more and more things trading. And yeah, there's a lot of good points that you made, Cheds, just listening earlier, where you were talking about how you need to be familiar with things to trade them. And gaining that familiarity, I refer to it as dating. You know, if I'm starting to date a new ticker, I need to get to know it. I need to know that bid-ask spread. And it's almost just preparing for later down the road. And honestly, I'm not a very active alt trader. I've got Bitcoin, I got my Ethereum, I got my Link a little bit, but I'm not doing the very active altcoin trading. But over this past year in 2020, I am just sharpening my skills in terms of observing what the correlations mean and how the money is jumping around from one to the next. And I know that if and when I ever do become a more serious altcoin trader, that this time that I'm putting in now, even though I'm analyzing tons of coins that I'm not trading, it's going to pay off big time in the long run. So get to know your trading instruments.
So that's interesting. You raised a lot of points and kind of how the money flowing between crypto and equity markets. And the thought that came to my mind as you were talking about studying these alts, you know, with Bitcoin becoming institutionalized, what if kind of writ large alts or even kind of some version, you know, alts lights become institutionalized? So that's kind of like another kind of phasing up, a growing up of the market. Do you agree with that? Do you disagree? And kind of how do you see this kind of new paradigm, all the stimulus money, and what are your thoughts kind of on that front?
Yeah, I mean, the more volume we see, the more liquidity there is. And even, you know, it just attracts traders. So volume begets volume, so to speak. And that adds a lot of interest. So as far as, you know, where the space is headed, I definitely know that there are great things for the cryptocurrency space, but I also know that I am not, you know, fundamental picker of what coins are going to do what. So I'm very much a take it one day at a time kind of person and watch it all unfold, and institutions getting involved. Definitely very excited for that to continue as we're seeing it really just get going here with Bitcoin. And I do believe that, you know, Ethereum is going to get that narrative as well. And, you know, in 2 years, we're going to be talking about a coin that we've never heard of in this moment as being a big thing. So again, the constant evolving space is going to keep the opportunities coming.
So if you were new though, and you're new, you're just watching this, you know, and you've got 5G or something, or maybe $1,000, would you recommend that person starts, you know, trading Luna, or should they just buy some Bitcoin? Or not that you want to give advice, but how might that theoretical person approach the crypto market?
I would definitely put some money in to have skin in the game. And, you know, you're choosing Bitcoin and Ethereum to be the major players, but then using that incentive. You know, I had no idea what I was doing when I started with stocks, but I put money in something and that was my incentive. Well, I better figure out what I'm doing here and use that incentive to learn. So it can be a great motivator. And then, you know, you get to recognize your emotions. I've never felt that before. Numbers on the screen are making me feel sick to my stomach. So you have to learn all this stuff. And having some money on the line definitely helps with that. You know, you don't want to have $100,000 saved up and just start trading. You want to ease your way into it because it takes years and years. And that's the thing that people don't really realize, that we're literally looking 5 years out. If you want to be, you know, a successful trader, whether it's a side hustle or you want to do it full time, you literally got to be looking 3, 5, 7 years down the road if you're going to be looking to try and master this skill that requires an insane amount of time, just like any skill does.
So, but do you recommend they do the chat rooms? How do you feel about, you know, the idea of chat rooms? I have thoughts, but I'm curious what you think about that.
I mean, there's obviously good and bad of anything, but I learned a ton in free forums. You have to sort through all the clowns and the junk, but there are good people out there that are willing to help you. And I stumbled across one of those, and he ended up being my mentor. And it was really just me like asking a question, and he'd point to this and he'd point over here, and he would just point me down rabbit holes. And I'd say, okay, now I'm going to Google and YouTube for the next day or two until I get this concept down. So I think that, there are a lot of very helpful people out there, and myself and you are two of those people who like to respond to people on Twitter and interact with everybody. And I think it is very useful because, again, it's just pointing. It's not, I don't have to sit there and spend 2 hours talking to somebody. I can spend 5 minutes and significantly impact their path of education just because I know the things that they should be honing in on to learn a certain concept.
So I'm a little more curious about, so your style, I've watched your videos, of course. I'm curious how you feel about like Elliott wave trading. What are some of the styles you're experimenting with that maybe we don't see? I'm curious about some of that behind the scenes stuff, if you don't mind.
Yeah, so I have my style right now and what works for me, and it's mostly price action. And since being introduced to crypto, I've been loving EMA 1226. That has transformed my stock trading game. I brought that from crypto into stocks, and I have not looked back since. It's had wonderful results. So I'm happy where I'm at right now, but I also realize that there are many different ways to win at this game. And I know that there's an Elliott wave trader out there that's better than me, and I know there's an Ichi Cloud trader out there that's better than me. So there is no one size fits all. There is no right way to do technical analysis. It's what resonates with you as an individual. And honestly, for me, I'm in the middle of a 8-month winning streak right now. That's one of my best just as far as consistency. It's not my biggest wins because it's not 2017 crypto, but it's just consistent. And honestly, I'm in a point right now where I'm not changing anything until I need to. And I have a new desktop sitting in my kitchen that has been sitting there for 2 months, and I haven't used it once. I have this whole new setup ready to go, and I'm not changing to it because everything's working great, and I don't want to ruin my mojo right now. So honestly, that's where I'm at with technical analysis. And the market environment will change eventually, and I'll have to tweak things and adjust to that market environment, but not yet.
I love it. That makes a lot of sense. I mean, if something's working, really, why change it? If you don't mind sharing for some of the new traders, what are some of like the biggest mistakes you made maybe in the first year or two when you started trading, Dan?
Oh, all of them for sure. Overly emotional, getting the penny stocks is where I started. So I fell in love with the penny stock, and I would, research everything, and I would make excuses for everything. Oh, there's dilution, or this negative news came out. Well, that's just because this. And you see people doing it all the time. And I just look at people and be like, man, I was you 10 years ago, and I learned the hard way. And you try and tell people, and they have to learn the hard way as well. So you don't fall in love with whatever it is that you're trading. Like, honestly, I want Bitcoin to succeed. But if it goes down to 2,000 from here, I'm not going to lose a bunch of money because I'll cut it. If it's not serving my purpose, and if it's not making me money, I don't have that emotional attachment to it. And you have to learn to not have that emotional attachment. So don't fall in love with the companies. I was swing trading a stock that was delisted, and I took one of the biggest hits that I had ever taken at that point overnight. And that was a very big learning experience for me because the next day I felt pretty good. It was a mistake. I wasn't crushed over it. I wasn't moping around. And my reaction to that let me know, okay, I can do this long term if that big mistake is not going to break me. So every mistake in the book, no stop losses. You don't have a stop loss. Your position goes down 50%. Every single bounce, you're saying, okay, we're finally going to make our way back up, and then you drop to the lower lows. So learning about the sickening feeling in your stomach when you don't have risk managed and you don't have a stop loss to cut out of positions that are not working for you. You have to learn these for yourself because, again, you can tell people about it and they can say, yes, okay, I get it, but you don't get it until you feel it.
I love it. As you were talking, so I'm curious, how do you approach scaling in? And if you not just scaling in, but let's say averaging down. So, there's averaging up, right? Then there's averaging down. So if you're averaging down though, what about your original stop loss? And if you're going to forego that now, do you have a whole new idea? So I'm curious how you play that through and how you approach that.
Yeah. So scaling in and out was a game changer for me as well. Probably sometime within the last 4 years around when I was starting crypto as well, where it's just accepting that I'm not going to be nailing tops and bottoms, and I can just get better averages with scaling in and out. So the key is it's okay to scale in to a position, and it's okay to average down if that was part of the original game plan. The last thing you want to be doing is having a game plan established it starts to go against you, and then you change everything up. So for me, for the most part, 99% of the time, if I have a trade game plan and I have my stop loss established, I will stick to that. And there are times where I'll be, live streaming and trading, and I'll just say, oh man, I really don't want to stop out right now with this RSI where it's at. But I will stop out, even if the RSI is extended, because you get that once every 20 times scenario where we get real extended and you end up giving back a week's worth of profits in one trade, and it's just not worth it. So averaging down can be a part of a game plan, absolutely. And I have that as part of my game plan. And you have to, you do the math. Okay, how much would I risk if I make an entry here and then another entry on Bitcoin $1,000 lower, and then my stop's $1,000 under that, trying to make a swing trade entry. And you can figure out, okay, well, worst case scenario, I will lose this amount of money. And if you're okay with that, and if the risk reward ratio dictates that that's an acceptable trade, then that's a fine game plan.
So at this stage, and thank you, that was a wonderful answer, folks. This is Chartman Dan. Find him on Twitter at Chart Guys. So at this stage of your career, do you still journal? Do you still keep a trading journal? Are you still logging, all those, in and outs in the QQQ like 6 times a day or whatever?
Good question, and no, I don't. And it's the kind of thing where I feel a bit hypocritical because the people I'm teaching and the newer people do this. I did this, you should do this, and I'm not doing it. And again, it's to the point where things are just firing on all cylinders, and I check in every month and I, look at, okay, where am I? What were my gains on the month? And as long as I'm coasting and there's nothing to change, then that's fine. Now, again, if I start to hit a little bit of a rough patch, that's when I go back and say, okay, I need to be paying more attention. I need to be shifting things because, again, the market environment shifts. And we can be trading one way in a bull market, and as soon as that bull market ends, if we trade that same way, we will give back our profits. So I will go back. I used to do the journaling, absolutely, entry, exits, reason for the trade, notes about the trade, what's my target, every single trade, just a spreadsheet all the way across. I love doing handwritten stuff. I feel like it burns into my brain a little bit better when I'm doing it that way. And I don't anymore, and I don't have the time for it, to be honest. If my results start suffering and I need to change something, then I will absolutely fall back on that. I have a lot of things I will fall back on, and that's honestly, it's a nice little safety net for me, is saying, okay, well, if I lose this streak that I'm in right now, and if I hit a rough patch, I'll set up my new monitor, I'll set up the new computer, I'll go back and review my trades, I'll slow down a little bit, use a little bit less capital, and try and find my groove again. And it's what I call the flow state, where right now I'm in the flow state where it's almost second nature, it's muscle memory. You get to a point, whether it's riding a bike or playing ping pong or whatever, it's muscle memory. And I'm fortunate enough to be in that right now. And when it's gone, I will have to regain it through those steps.
That's amazing. I was just thinking about that. And I know what you mean, because you're comfortable with how you've defined your risk. And I feel like everything flows from that. And when you talk about your fail safe, I was thinking about, let's say you lose 3, to a new trader, you lose 3 trades in a row, mandatory 3 days off, something like that. Find out what works for you. Sometimes I'm impulsive. I don't know how you deal with it, but, make myself go do 20 push-ups, then come back and see if I still think it's a good idea. You talk about being emotional because we're such emotional creatures. And we have to deal with how it's a lot of money sometimes, like $1,000, that's a lot of money, can go one way or another. And so you have to be apathetic about it and treat it like poker. So do you feel like it's just chips, or is it money? What do you think?
Honestly, it all keeps going back to 2017 with crypto, because it was money, and then it just became numbers on a screen at that point because things picked up so significantly. And if I was viewing it as money, I would not have made nearly as much, because again, it was just it's a video game for me, and the goal is to accrue points in the video game. And these points are very valuable in real life, and you can do a lot with them, but it's a complete emotional detachment from that money. And it takes years. Again, this is all, you can learn the book stuff about technical analysis, and that's the easy part, because it's the emotional part that really takes a lot of time to get over, and detaching the emotional attachments to money is part of that. And like you said, I love the breaking the momentum. There's momentum, and when we get in the flow state, you get wins. It's great. The opposite of that happens. And I give the analogy where if you're playing basketball and the other team goes on a fast break 3 times in a row and scores a quick 6, 8 points on you, you call a timeout as the opposing coach and you break that momentum. So if you have a couple losing trades in a row, call a timeout on yourself. You stop trading and you break that momentum and you hit the reset button. The most powerful thing that we have as traders, we choose when we trade. There is nothing saying we have to be in a trade at any given point ever. So we can wait till everything aligns for us. If I'm a marathon runner, I don't get to choose the day that I run the marathon. If I'm sick, it's too bad. But as a trader, if I'm sick, I'm not trading today. I'll wait till I'm 100% and in the zone.
That's, you raised so many great points. I think one of them is that just because you're a trader doesn't mean you have to always be in a trade, obviously, right? Because trading also can be waiting, equally as important, studying, preparing, all that good stuff. I think it would be helpful. I'd be curious, what are you looking for, generalized criteria? For example, I like those throwbacks, the retest, the broken resistance. What are some of the things you instinctually look for in the price action, all that good stuff?
So I love oversold bounces. It's one of my edges. I also love equilibriums, as you mentioned. So I'll look for oversold bounces. My favorite are what I have recently referred to as back burner trades. If something coming off a really big move, ideally blue sky breakout all-time highs, first hourly oversold on a pullback generally has a really high probability of a bounce. So I'm making my game plan. I'm scaling in a couple orders and I'm playing that oversold bounce. And because of that, that allowed me, even though 2018 and 2019 were really rough for crypto, there were some really nice oversold bounces. So I was still sticking around for those. And if it's an equilibrium, I'll recognize a lot of volatility and then the tightening range will start forming and I'll be placing trade ideas based on equilibriums, anticipating the higher low and then anticipating the lower high. And then the equilibrium will get to a point where it gets tight enough that I'm just saying, all right, hands off until we get a clear break one direction or the other. So as far as, choosing the ideal trading environment, once you identify your edge and say, okay, well, I'm really good at, shorting whatever, or I'm really good at going long when we're looking for a daily high or low, then you can just hone in and wait for those trades to come to you to ensure that you're staying as high probability as possible for the desired trade outcomes.
So well spoken, sir. So how do you define that oversold in that 1 hour? Because obviously that's almost like a debate. What's oversold? What's not oversold? Are you having to then go to, now you're looking at your 15-minute chart and you're looking for the RSI double bottom? And what are you how are you approaching that?
So honestly, just hourly, again, if we're talking back burner, first hourly oversold from a big bull move, as that RSI is approaching 30 on the hourly, I will zoom in because my ideal kind of bounce, I want a waterfall drop on as many time frames as possible. And what I mean by waterfall is I mean a drop, a straight drop. I don't want your little bear flag stair step down. I want the 2 minute, the 5 minute, the 15 minute, the hourly, all dumping hard waterfall because that's where you get the most likely V-shaped kind of bounce scenario with a lot of follow through. Every time you're stair stepping down with little bear flags, you're establishing new resistance levels and you're also cooling off shorter term RSI levels. So if my hourly is oversold and my 15 minutes getting oversold and my 5 minutes oversold, I have a lot more confidence than if my hourly is oversold, but my 15 minutes not because we just formed a little bear flag and cooled it off. So as you said, confluence of signals, it's multiple time frames ideally lining up as oversold. I got my backbone, the hourly oversold is the play I'm making, but my confidence level can be dictated by what the shorter term time frames are doing in unison with that hourly.
I think you raised many great points. I think it's important about how it's not just what the price is, it's how we get there and kind of those rapid moves. That you can tie that into sentiment. So those rapid moves cause moments when people are complaining about the price. And one of my central, reasons of trading is I buy when other people are complaining about the price. It's a nice way to kind of start. So there's that. It's how we get there. Stair stepping. You make an excellent point. You think about it, in the inverse. If you just do a series of bull flags, you tell your buddy, hey, look, there's support. So obviously there's resistance that way. Hopefully not too technical for the people watching, but in terms of the RSI, I'm curious where you land on the debate of regular divergence versus hidden. My view being that since RSI is bounded, it's 100 and 0, it's going to have a lower high. I like to use the on-balance volume because unbalanced. What are your thoughts on that, if you don't mind?
So here's a shocker. I use RSI all the time trading. I don't use divergence, and it doesn't factor into my trades at all. And people will point out, well, this is divergence and that's divergence. And honestly, it has no bearing on my trades whatsoever. So right now, people keep talking about the bearish divergence on Bitcoin that's going on. But for me, price action is so much more important. And if we're setting higher lows, that is all I care about. Yes, it can tell us to be cautious, just like the monthly chart being so extended with no consolidation recently tells us to be cautious. But the divergence does very little for me as far as RSI is concerned.
That's good. I think, simple setups are important. I think a lot of people get lost in the woods when they try to have RSI and stock RSI, and they try to have, 8, 12, 26, and 34 EMAs. I mean, you have to kind of pick a position, you have to stick with it and not kind of adapt it. So I like purists, so that's good. So I had questions in my mind. I had so many thoughts. So I'm checking my notes, and it was ask him Bitcoin and the current supply demand imbalance. Did you heard my thesis, my idea earlier, right? Do you first of all, do you agree with that? Bitcoin to be taken offline more than is being mined every day. So you agree with that first? Or no?
I agree with that. And also just the point, once Tesla made its announcement, the fact that we're not seeing more announcements in response to that, I know that people are accumulating, corporations are accumulating in
Quietly.
Response to that. Yes, they're not telling us until it's completed, and then they'll tell you all about it. Yeah. So I absolutely feel that is going on behind the scenes at this point. I mean, the fact that the monthly chart looks like it does, to me, that the fact that we have not topped out on that monthly chart tells us that there is sustained larger buying still going on.
So I'd love for you to, if you don't mind, in a few moments, maybe give us a monthly, weekly view, a couple thoughts on that. And as you do that and prepare for that, given the supply demand imbalance, can we have an 80% pullback again? Like, can we do that again? Is this time different? And then if we can kind of switch over, I'd love to see his screen, but think about that. And maybe I'd love to hear what your thoughts are.
Yeah, that's a very good question. Not sure if my screen is showing at the moment. There we go. So obviously the monthly chart, again, this doesn't mean bearish. This doesn't mean anything but be cautious. I look at this monthly chart and I know at any point in time from here forward, I will not be surprised when we see monthly consolidation because it's due. And I was saying that exact same thing on Tesla for a while, and then we got our monthly consolidation in a big way. So when monthly consolidation happens, it will not be surprising at all. So that being said, 80% pullback, I think if we were going to see that from this point, it would have to be the government stepping in and trying to do something negative with cryptocurrency and Bitcoin. I don't think that with the amount of big money that we're talking now, with the accumulation of billions going on by some people that a lot of people look up to, I don't think we can get back 80%. So if the government does not interfere, and I guess you could also look at it and say, maybe quantum computing comes along and maybe, I don't fully understand. I'm not going to pretend to understand the deep technical aspects of things, but it would require a major fear news event to be a catalyst to drop that significantly. So I'm looking for monthly consolidation and a pullback, and there's a lot of space for this monthly chart to remain healthy next time we pull back. And honestly, as a bull, I will be a lot more comfortable allocating more significant capital onto a little bit of a pullback on the monthly time frame just to cool everything off and just a little bit of a reset and a little bit of a flush out of over long leveraged bulls. And I will be patiently watching for that. As far as the weekly is concerned, as you pointed out, the higher lows are the most important thing for me. And as long as the higher lows keep printing, we're not going to see monthly consolidation. So the most important level for me is 50,000, 50.3. And again, it's just a question of, do we break 50.3 thousand to start monthly consolidation, or is another all-time high coming? And as you said, I personally favor the all-time high, and mine goes beyond, follow the trend. The stock market, which has had correlations with crypto, is extremely strong over the last week, hitting all-time highs all over the place. You've got the altcoins making their bull move over the last week in a very impressive way. So I see a lot of bull momentum out there, a lot of confidence out there. There's no fear in markets right now. And that can go a long way for a stock, or I should say for an instrument that is right under all-time highs.
What do you think the dollar is going to do? Because I think that's really the kind of the elephant in the room, right?
Yeah, I've been pleased with how little impact the dollar has had on this 3-month bounce. But I was looking bullish on the dollar. And again, I'm not going to say I nailed the bottom, but for the month that it took us to find that bottom, I was saying, watch the dollar going bullish. This is an overcrowded trade. Everybody's on one side of the boat. And look at this monthly. This is the 6-month chart. Every candle here is 6 months. So we're looking long term. And this 88.25 support, I'm just watching my equilibrium because that's one of my edges. I'm looking for a higher low. So as we were way extended, everybody's bearish. I forget if the weekly got oversold. I think it did. We got right down to oversold, and we got right to that support. So if we get follow through, if the monthly trend changes bullish, and it's going to take a long time before we get that information. We have to top out on this bounce. We have to hold the low. We have to see continuation. If the monthly trend changes bullish from here, we could trade within this 6-month equilibrium for 3+ years potentially if it just keeps tightening up. So that's one possibility that I'm keeping an eye on. But the bulls have to prove it with a monthly confirmed trend change. And in the shorter term, we are looking for a monthly lower high to be the result of this bounce.
Isn't almost like a tightening range? Doesn't that almost favor everything else? Because that kind of takes volatility out of the picture, right? Then you kind of like focus on another piece of the puzzle. So that sounds good, right? If it kind of would consolidate towards an apex or whatever, equilibrium.
Yeah, lack of volatility. Like you said, I mean, if people aren't worrying about one thing, then they're confident, and there's a lack of fear in the broader market. So I would love a tightening dollar range for a couple of years. It would leave the narrative open for however many other things that we can be talking about in markets.
So, but silver and gold, can they stay together? I feel like there's kind of I was thinking about that today. The media is all anti-gold right now. So isn't that maybe think it meet it to bottom? Is there a coupling, a decoupling? What are your kind of thoughts along those lines?
I am bullish the metals. I'm cautiously bullish the metals because they have proven to do. They're in the doghouse for me. There's a lot of time frames that need bullish trend changes. But I look at this. I saw someone post on Twitter today, the macro gold narrative is dead. And I look back and it's up, over 10% every year the last 4.5 years, and we're 8 months off of our all-time high. I look at this 2-month time frame, every candle 2 months, and I see no red flags on this chart. I would be looking for a higher low. And, if we were to set that higher low, fail the all-time high, and then confirm a downtrend, that would change things. But I don't see anything wrong with this chart right now.
Is that 12? Is that your 12?
EMA, yeah.
It's just like a bull flag or a pennant right into the 12, right?
Yeah, I like it a little bit better than the monthly because the monthly did give us this little lower high and lower low. But I am bullish. Again, I'm using my IRA because my IRA has just cash sitting there. It's not my day trading account that I'm using every day. And so I have been scaling into this position. And it's funny that you mentioned this because this is the first time in as long as I can remember that I changed my stop level for my game plan. And it was honestly me recognizing, well, it's a small position. I've got all this cash sitting here. The last time I used my IRA cash was last year. I said, all right, if I'm not going to buy this SPY dump, how can I look myself in the mirror? If I'm looking years out, I want to buy when there's fear. And you're right, there is fear in the metals right now, specifically gold over the last 6 months. And I am attempting to position a larger swing position looking to the end of this year. I'm just looking months out. I'm not looking 10 years out. I'm looking for that higher low to be established, for some daily and weekly trend changes to take place. And the bulls need to get their act together here when the dollar sets our monthly lower high. So when the dollar loses its daily uptrend and ideally loses its weekly uptrend, I need to see gold changing the inverse. I need to see it changing its weekly uptrend into an uptrend. And I need to see proof from the bulls. We got this nice double bottom. They played defense. Now they need to go on offense. And step number 1 is getting over 1756 resistance, which we're going to be watching closely over the next week or two.
I think that segues nicely into the next one. I was thinking XRP, Dan. And it's like when something is forgotten and it's unwanted, and it's 20 cents. And, like gold, like the fact that people are complaining about it, you let that simmer for a while, you'll forget about it. You come back and like gold's bouncing. It's one of those things. I'm sure you would agree. See you nodding your head. Talk to me about XRP. Where are we at? Take the floor, sir.
Yeah, so it's definitely as you said, and that's the beauty of when the altcoins really get running. It's just you go from one coin to the next. Oh, this coin hasn't run yet, so we're gonna jump on this. And honestly, I've been thinking, like, when's XRP gonna get its turn? And people that know this, they've been saying, watch BCH, watch Litecoin, the coins that haven't had their massive moment yet. And that's the way to do it. There's emotional and psychological cycles out there, and that crypto is certainly not more than, but just as much as any other place in any market. And you got XRP here just making a monster move out of nowhere in one day as everybody just piles in at once. Honestly, the chart I care more about on XRP is the BTC pairing and the weekly equilibrium that is forming. So we've got our big time breakout high, our dump crash low. We set a lower high, higher low, and now we're looking for another lower high and the potential to tighten up within this equilibrium for another bunch of months. So I know that if we set this lower high, we can be watching for a higher low. And then once we get to a real tight point, it's going to get real interesting on XRP, where we watch, which direction is this equilibrium going to break? Can we see this long-term downtrend finally shift momentum? We know the bearish narrative has been out there. There's tons of XRP haters. Honestly, I don't care what coin does well. I don't care what coin does poorly. I care what coin I can make money on. And again, that's the lack of emotional attachment. And so, if XRP is going to break this BTC weekly chart bullish, then absolutely it's worth paying attention to and worth trading.
Yeah, you see that 1,000 Satoshi level, like in the daily chart. You saw how it was resistance, then we broke through it. So that would, on the BTC pair, just like you're saying, the 1,000 Satoshi, right there. You can see that level. Maybe that would be the low of, the equilibrium, that higher low potentially. That's a really good point. You want to look for that key level. You want to see when that momentum shifts. But it's interesting. You think about Bitcoin and these BTC pairs. I think it's instructive, like you said, to look at BTC pairs because it also tells you about Bitcoin. It kind of gives you that gauging because Bitcoin it's a long term. It's a secular uptrend. It's all this stuff, the primary trend, right? It's go, go, go. So it's all these alts are almost always uphill a little bit against, right? All BTC pairs have that force.
Yeah, they're trying. Everybody. I call it the spotlight when you have the U.S. dollar pairing and the BTC pairing of an altcoin. They start correlating together and they start doing the exact same thing on the shorter term time frames. And I call that the spotlight because that's getting everybody's attention and that's the coin that's moving up the most. Because if it's outperforming Bitcoin, then it's getting attention by definition, essentially in the crypto space. So I watch for things to get the spotlight. And that's what I was talking about. I was in 2017, I was not paying attention to altcoin BTC pairings at all. And this time around, I am studying. I'm studying and putting in a lot of time, and I'm watching the little clues. And I watched ADA get in the spotlight and make a massive move, and I saw the spotlight fade, and then I saw Theta do the exact same thing, and then I saw that spotlight fade. So I've been loving it. I'm not even making a bunch of money on these coins. I'm just loving the observations, and it's almost like the satisfaction of being like, yes, okay, it's happening like I thought it would. That's enough.
It is fun actually because the price action's been orderly, relative strength, right? And in the pullbacks, and you're not surprised which ones break necklines on it. Attempted 1 hour inverted head and shoulders and stuff like that. So it's been consistent. I'm sure you could name 3 or 4 alts which have kind of stair stepped and have kind of kept all recaptured levels. So we've had that kind of condition. I think I was looking at an alt that, if you think about conditions of uptrends, right? I was looking at an alt that was so bullish, it was bouncing above the upper Bollinger Band. Like it never even came back, to test the moving average. That was like, I think maybe I watched a couple of shows ago. So it's been that kind of environment. I had a question that I had forgotten and now I've remembered, thinking about XRP and, who knows about the news and blah, blah, blah. So are you EMH, right? Efficient market hypothesis. Semi-strong version that all public information is baked in. So do you believe you can just look at the chart and it doesn't matter what so-and-so is saying, or should you read the news and kind of, tell me about that?
So I view it as a spectrum. You got technical analysis here, you got fundamental analysis here, and the only two wrong places to be on this spectrum are 100% one or the other. You need a blend, whether you're 80% fundamental and 20% technical, or 80% technical and 20% fundamental. You have to have that blend. And you definitely want to be paying attention to the headlines out there. Again, understanding what priced in means has saved me so much money over the years by selling into events that people are looking to hold through because, oh, we're just getting started. And the big one goes back to, Canadian cannabis and the first day of sales marking a massive top and a massive pullback. And again, just understanding the psychological cycles of what is priced in, what news isn't known, and trading based off of that. So anytime, a headline, at this point, when Michael Saylor comes out that he's bought Bitcoin, it's almost like it's not a bullish headline to me anymore. Everybody knows he's bullish. And when he tells you, he's already bought. So it's not like his buying pressure is going to help the price. So it's almost like, that's a sell the news little event every time he now mentions that he's bought more. It's not working out that way as far as, seeing a drop on that news, but that's my mindset almost to it. So, if someone comes out that it's new information, people are talking about the rumors that Walmart might be buying Bitcoin. If that news comes out, it's not priced in and the market will respond accordingly. So I definitely think it's important to pay attention to the headlines, but don't get lost in the headlines. Price action is more important than the headlines, but you don't want to ignore them.
I think that's smart. We have just about 8 minutes left. I'd like to really talk, and thanks for coming, Dan. It's been an honor. I'd like to talk really up until about 2 minutes before. Would you mind taking maybe 4 or 5 minutes? Talk about, you mentioned the marijuana market. Talk about where we're at. Is the luster still there, or is it kind of what's going on? I'd love to hear your thoughts on that because I know you have your ear to the grindstone, or whatever the saying is.
So yeah, it was a little bit of a sell the news event with the election in Biden, because you get all this hype and say, okay, well, if we get this person in, then we'll have the Senate, and if we get the Georgia Senate, then we'll have control, and the Democrats are more favorable, and then we get it, and then you realize, oh wait, the government sucks, and they're so slow, and nothing changes. So you get to a point where there's euphoria, and then we hit our top, and now people are realizing, oh wait, it's still a really long road before we're going to get these changes. We're still Schedule 1, which is absolutely absurd. So, you have these companies that are traded on the OTC, and they can't have institutional investment in many ways. And I myself can't day trade these names because they're not liquid enough to do so. So it's worth paying attention to the sector. We're seeing monthly consolidation right now. We're anticipating monthly higher lows, but without a doubt, the sector is weaker than the broader market right now. It's a bearish correlation. So it's almost like the broader market makes 2 steps forward, MJ makes 1 step forward. And when it takes 1 step back, we take 1 step back. So it's not an ideal correlation that we are currently in as we are seeing monthly consolidation, but the opportunities are going to continue, and we will eventually see marijuana rescheduled, and we will see these companies that have great, balance sheets and great earnings reports. We'll see them uplist, and there'll be more attention. But as of right now, it's definitely a patience game and a waiting game. And I personally have a rule that I will never long-term hold anything that's traded on the OTC, and that comes from my mistakes in my penny stock days. So yes, these are the most real companies that I've ever seen on the OTC, but I can't just buy and hold them because I don't trust the OTC liquidity, and I don't trust, the fear hitting the market and seeing these names, which they did last year, dump into extremely excessive levels that don't make sense as far as market caps and their future potential. So for me, it's a waiting game for the hype and the momentum to come back. I'm definitely a momentum trader, and I will patiently be watching because, again, it cycles and there will be more opportunities. I've been trading this sector. That's how I started 10 years ago. And every election cycle, there's a run up, and it's just, down in the summer, and then into the fall and the new year, you get a run up because states just keep voting, and it keeps getting in the headlines, and it keeps perking people's interest. So I definitely play the seasonal cycles in the sector, and I am looking forward to progress in the political spectrum.
I think progress moves forward, sir. How would you get exposure though to that market? Are you playing MSOS or how would one, not you, let's say I want to get a little piece of the action. What do you think about that?
So I personally, I treat it the same way where I'm in so many things that I can't, if I were only focusing on alts or only focusing on the MJ sector, I can really dive in. I can get to know every single ticker, but I don't have time to do that because I'm always jumping around. So for me, there is an ETF that's traded on the NYSE, and that is MSOS. So for me, I keep it simple. And if I'm bullish the sector, there's definitely some names that are stronger than it, and there's some names that are weaker than it. But I'm going to just trade that ETF and keep it simple. It also allows me to use stop losses, and on the OTC, I can't use stop losses on Fidelity. And it's liquid. It's a lot more liquid in terms of entries and exits. So it's the same thing with crypto. Like I said, I'm focusing on the main ones because I don't have the time to devote to every single individual little coin that I want to be paying attention to. So again, if you're newer, I would say focus on the best in class, the best in the sector. Everybody wants to find the thing that's 0.001 pennies that can run to $1 and make you a bajillionaire. But in reality, focus on the best ones. And then again, when you have your skin in the game, you learn. You're constantly learning, you're observing, you're interacting with people that know the space, you're asking questions. Hopefully they're nice and help answer those questions. But get a little bit of skin in the game with these stronger names in the sectors. And then you can branch out from there as you get comfortable and put in a lot of time in effort in research or studying technical analysis or whatever place on that spectrum you end up being.
So we got about a couple minutes left. Maybe just take a minute, if you don't mind. Tell us about your membership services, what you do. I'd love to hear about it.
Sure. So I am not a salesman, which is my favorite part of doing what I do. So honestly, it's just we put out a ton of free content and we point you to our free content. And if you like it, we have paid courses, we have paid membership, we got a chat room with 1,000 people, with some of the most brilliant people I've ever met in my life. And I have learned so much in this chat room. Just as much as I teach people, I'm getting back. And so chartguys.com is the website. We got a free intro to technical analysis course. And again, if you like the free content, then we earn your business for paid content, but we just pump out the free content. So explore that YouTube channel, follow us on Twitter, check out the free course on our website, and we look forward to interacting with you. I love reading the YouTube comments just like you do the Twitter messages, and that for me, the human aspect of this game is what keeps it from getting boring. If it's just numbers on a screen, I can do that for a few years, but what am I doing with my life? So the human interaction is what is the continuation motivator.
We have we have some similarities in that I started a lot of that penny stock trading, and I had a mentor who kind of taught me some things that blew my mind and really made me hungry for more. And now we're kind of passing it on, completing that cycle, but also that we're still learning. I mean, there's so much I don't understand. And I think I'm a lot better about managing my risk, but the other stuff I have a long ways to go. It's been a great time having you. That is Chartman Dan. Obviously, he talked about his website. He is on Twitter at ChartGuys. Hopefully we'll have you back at some point. It's been a lot of fun, man. So thank you so much.
Absolutely. Glad to be here. I got one quick question. Does that bull behind you weigh like 50 pounds?
I'd say maybe 20, 25.
All right. I think I got that same bull really rusted. Yours is nice and shiny. I might have to paint my bull.
I got it from our friend Big Chonas.
All right. Very cool.
Yeah, man. So it's been great to have you. I think we're wrapping things up and make it bread with Cheds. And folks, thank you for coming. Thank you for watching. Stay safe out there. All right.